Welcome to the Hurley Investments Market View commentary for Monday, July 27th. I am actually pre-recording this for you. And I'm pre-recording it for you because I have an opportunity to go on a special date with my wife to go see Colin Ray in a small intimate setting concert type thing. So I am pre-recording this. Hopefully I'll have it out at 6 o'clock so you guys will be able to see your commentary. You just won't be able to make any comments on it. But what's going on? This week we have a ceasefire with Iran, but today we also had the recollection of the understanding we have an FOMC rate meeting. The S&P was up almost 1% today, until Trump had to make a comment that said, I support my guy, but he better lower interest rates. The moment Trump came out, and I just wish he could learn to shut his damn mouth at times. Moment he came out and had any comments in regards to Warsh, it was talking out of both ends. I support the guy, but I'm expecting that we have lower rates. And it just crushed the market. We have a standard ceasefire. Well, Kevin, we've had ceasefires all the time with Iran. Okay, let's face it. We can't trust them worth beans. We know we can't trust him worth beans. We don't even know who the new leadership is. But a ceasefire is good for oil, which is good for the markets to go higher. Why Trump had to say anything about Warsh? Smart thing to say. We have an FOMC rate meeting. I support the guy. They'll do the best job they can. If he had said that, we would have been up 1% today. Instead, we're flat. We most likely will be flat tomorrow, and we'll be flat Wednesday, pending what Warsh says. But hopefully he'll say, hey, we're keeping status quo. My expectation is there will be no rate hike. We're just going to keep things status quo because this is transitory inflation. Kevin, how can you say it's transitory inflation? Well, because it's a freaking war. Inflation for most other things has calmed down. Well, Kevin, that's not true. I'm like, for most things we spend our money on, it has come down. Housing prices have not come down, but that is a supply and demand. So we are mostly protected due to earnings coming up this week and earnings we had last week. I wanted to go over a couple of the key earnings, really meaning Key Corp. Let's go over Google. Let's go over Netflix. The short answer is Key Corp beat on the top line at 44 cents per share. But they missed on the bottom line of the revenue by $10 million. They have traded mostly flat, and I did have the chart up. Their earnings were where they were right at 23, kind of traded positive, and then came down. Today, Friday, Thursday, Wednesday, Tuesday. Yep. So the short answer is, their earnings was this day right there. They've traded mostly flat. They're mostly flat right now, getting protection on the 50-day. And they're also getting a little bit of protection on a pivot point. And that pivot point sits at 22.45. So they've got some downside buying opportunity at the 50-day simple moving average at 22.37, as well as the pivot point at 22.45. Now, we tell you guys all the time, the pivot point is not protection. It's just short-term group herd mentality, which is why I don't use the 5 and the 20, the 9 and the 20, the 15 and the 30. These short-term crossovers don't have enough information behind them for me to spend time caring about them. I care more about what institutional money looks at. Institutional money's not day trading. They're not swing trading. They're not short-term trading. A trade in 30 days or less is basically day trading. That's where a 5 and a 15, a 5 and a 20, a 9 and a 20, a 15 and a 30 days, simple exponential moving averages are being used. We don't do that. We're not taking short-term opportunities to trade your money. What we do see and why we have kept Key Corp protection on for the most part, crossover, there would be a crossover right there, and we have the crossovers right there. So in real life, we're looking at, hey, this is kind of what we're looking at. This is where we're going to be spending our time seeing if it breaks a major moving average, then we're going to spend that time making sure that we are well protected into moving, seeing things move down farther. That's where we're at. That's what we're looking at. And that's how we're pretty much deciding what we're going to be doing for protection, taking it on and off on Key Corp. For the most part, you guys should have $23 August 21st puts in place. We will take that off when we see a bounce off of the 50-day simple moving average, which means we will probably not be taking it off until Wednesday afternoon. Wednesday afternoon is when we're going to obviously be having our FOMC rate meeting, and we'll make the decision there. All right, let's go to Google. I'm going to do Google a couple different ways just because. Google. Kind of, well, I put it down here. I should have had it in here. Give me a quick second. Let me find Google. Well, dang it. Okay. I'm going to run Google a couple different ways. Google's earnings came out at $9.11 versus an estimated $2.87. I should have had it. Sorry, I wasn't prepared as I thought I was going to be. Adjusted. Where's the adjusted? Dang it, it shows $9.11. But the adjusted earnings came in at, and I'm going to say it's $2.65. What the hell are adjusted earnings? And this is what it means. Their earnings came in at $9.11. $9.11 because their other company investments made $99 billion. They have invested money into other companies, chips purchases, buying into the company, shares of stock. It made them $99 billion. their core revenue on an EPS value made only $2.65. And that's their clicks, advertising, cloud, blah, 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 blah. So they dropped $6 after being up like $15 after market hours. This is where you don't understand the market. This is where your comments are, son of a bee. They killed it, and you're punishing them. Google, we still have $55 puts on. We have 380 short calls. We've done excellent, but we are looking at after earnings because of the bounce, because we're above the 200-day, because we're oversold in the Williams percent R. We are looking to take off the long puts at 355 that have basically doubled. We have like $15 maybe of profit in it. But we're waiting for the FOMC rate meeting. That's going to be our trigger to take our protection off of Google. And the last one that I want to go over, and really this was Brian, but we're going to go back a couple weeks. Last one I want to go over is Netflix. Netflix tanked after their earnings, all the way down to 65. It just is dumb. We had $74 puts in place on them, and we're just going to go Netflix. Netflix earnings on an earnings per share was 0.80 versus an estimated 79 cents. So it beat slightly. Bottom line, bottom line, 112.560 versus an estimated 12580. So they missed on a couple, well, on $20 million on the bottom line for their revenue. And they got punished. I'm going to go over an article on Netflix down here below, but Netflix and Google right now seem like huge opportunities. Key Corp, we calculated to possibly double this year. They would be a huge opportunity if we could get the commercial and housing market moving, if oil wasn't so bad and transportation was here, or if we could get a couple rate cuts. Key Corp will take off and you'll see their business really move. I have our list of our earnings here. I'm going to choose to go through our regular earnings though, but I'll put the big picture in. I actually should have done it, but I'm a little worried about the big picture. The big picture is becoming more of a little bit off. Not sure I understand where they're trying to get to. But the big picture right now came down to they think it's a carry trade that's going on with the Bank of Japan and the US dollar. Again, it doesn't make any sense. What really they're trying to say is the risk of the market's getting carried away. They're saying it is too much money for AI. And it's not. We've taken a look and we've seen AI all of a sudden well, I think we've seen the videos. How many different Netflix can there be? Well, there's a ton right now. Everyone's taking a piece of the pie and making money, and Netflix is not exactly losing money either. A 12.5 billion dollar revenue quarter, they're doing great. The fact that they can now notice a difference in the carry trade between the dollar and Japan, ridiculous. Really, it's kind of sad that I'm not comfortable with where the briefing is going for what they see, but I still put it in because it's been good in the past. Technically, slightly bullish with the bounce coming off of the 50-day. Yes, the 5 and the 20, the exponential moving averages are negative. The MACD is negative, but we do have a positive above 50 rating on the RSI. You can say it's still bearish from a drop earlier, which would, technically speaking, a week ago, you might have all three crossovers, but we're clearly getting a bounce off of the 50-day. S&P 500. Bearish. All three crossovers, and we're bearish breaking the 50-day, 50-day simple moving average. That might change with earnings coming up this week. And the NASDAQ is obviously bearish as well. It was bullish 2 weeks ago, but I'm sure it was bearish last week with Brian. We still think July will end up 1%. Taking a look on the S&P 500, it finished right at that 74.80-ish mark. We're at 74.13. With the earnings we have coming up to finish off this week, with July ending this week on Friday, we think we're going to be pretty flat to up 1%. Earnings, Monday, not much more to say. We have Coke, Hilton, PayPal, UPS, Skyworks, Waste Management, Boeing, Ford, Visa are our earnings that we're looking at tomorrow. Boeing will happen before the market opens tomorrow, and we'll see how Boeing does. It would not surprise me to see Boeing take off. Their expectations are supposed to lose 28 cents on a $24 billion quarter. I think they'll do really good. Ford, the same. Ford should do 4.7 billion, 47 billion on being up 36 cents on the earnings per share. They also should do pretty good. But we're going to see muted returns until Wednesday after noon or 12:15 Mountain Standard Time, when the FOMC gives their rate decision. Wednesday, GE Healthcare, Garmin, Humana, SoFi, Wing, Boot Barn, GMC, which is the Mexican Grill. I should know it, but I'm brain farting right now. JCI, Microsoft, and Qualcomm on Wednesday. Thursday, our bigger ones: ADP, Valero, Yum, First Solar, GoDaddy, MasterCard, Amazon, Apple, Monster, but it's not Monster. MicroStrategy. I probably did that wrong. I need to check that one. That might be Monster, but I think it's MicroStrategy. And then Friday, we have Chevron, Dominion, T. Rowe Price. More importantly, Wednesday, and I haven't typed it in here, FOMC Rate Decision. That'll be moving our markets. Thursday, GDP comes up. PCE prices, personal income, personal spending. It really will all come down to the FOMC rate decision meeting. All right. Been away for 2 weeks. Lots of articles. A very interesting article on Trump's new global tariffs. Again, he's pissed off. These other countries are not doing what they said they're going to do. And really, it comes down to whether you like it or not. It is not the U.S.'s job to pay for all of the other countries' crap. Trump's tariffs have not raised taxes on us. Oil is higher because of a war. Home prices are higher because of supply and demand. Well, Kevin, it's the tariffs to build stuff. It started supply and demand well before the tariffs started back in Biden's presidency. And it's supply and demand, if anything, it's probably a leftover from COVID. But for crying out loud, company, there's no reason why we should be in NAFTA. There's no reason why we should be overseas protecting Europe. There could be more that's done, and I understand Trump is wrong when it comes to trade balance. Some countries can't be at an equal trade balance with the United States because we're too damn rich, but they could be doing a better job. Very interesting article on the opportunity zones. Say some high-earning investors will soon own taxes on years of deferred capital gains. That will boost money coming into the federal government. This could be one of the reasons why we have a balanced budget, or actually, since we're not going to get all that tariff money, it might be a way that we will have a negative balance on our budget for the deficit going into this year. Google Cloud CEO Curran says customers are spending 50% more as segment blows away expectations, to the point where Google is renting out extra space. Because their AI and cloud production cannot come on soon enough, they are going to be renting extra space. They have not found the happy medium for AI and for cloud space infrastructure. So they're going to build it. In all honesty, over the years, I have paid more money to save my videos and pictures in the cloud, and I probably will continue to do so into the future. All right. KeyCorp earnings forecast as profit climbs despite slight revenue miss. I have KeyCorp's information numbers in here for you. Ford makes big move to be number one mainstream brand in J.D. Power initial quality study. Go Ford. This is the only car company that didn't screw millions and millions of pension workers by taking government money and destroying people's pensions. Don't reward companies' bad behavior. Buy Ford. They're great trucks. Working my way on down. Alphabet shares fallen reports most powerful AI model Gemini 3.3, 3.5 Pro is delayed. I call bullcrap, had nothing to do with it. It started to fall after they increased their spend by another $10 billion. For those that are with Fidelity, if you qualify for Fidelity's 2.5 million data breach settlement and learn how to fight identity theft, I put that information in here because I know some of you are Fidelity customers. Very interesting article. Americans say they need 1.2 million to retire comfortably. Survey finds, but many expect to fall short. It's interesting because that hope is that a husband and wife will each, on average, make about $60,000, so that they can pull another so they can pull another 30 to 40,000 out of the 1.2 million. And that's how people are getting to make $100,000 a year. Usually it's something like 20 $27,000 a year for the lady, 33 to 34. Excuse me. On a per monthly base. Well, I'm not saying that right. Let me try that again. Usually it's about 27,000 a year that comes from the lady on Social Security, to 33 to 34,000 that comes from the man. And then they try to boost that by $30,000 to $40,000 more, so they're still making $100,000 a year when you go into retirement. The problem is in the mid 2030s, most likely Social Security will be cut in half, or we're going to be printing a crap ton of money, and inflation is going to skyrocket through the roof. So, very interesting article for those that are looking at retiring. And that money dollar figure that people think, it will not grow by the 7% going into the future. So don't use those averages. And then I've got my Netflix article for you on their earnings. And I finish up with Jamie Dimon making the comment, market underestimates risk and he wouldn't buy stocks or treasuries at the current prices. We are overpriced in our stock market. There's not a good value sitting out there right now. So, guys, I appreciate you guys letting me get this off to you. I will have this posted, and we'll have the video posted here shortly. But thank you very much for allowing me today to pre-record this and get it out to you. Looking to go spend some time with the wife tonight, which I think is desperately needed on her side. Appreciate you guys. If there are any questions, don't hesitate to email me at khurley@hurleyinvestments.com. I'll get those answered for you. It's a sit and wait week to the FOMC rate meeting. Big earnings Thursday, Friday, and our month ends on Friday the 31st. I do not think we'll see a sell-off because we'll have no rate hike but no rate cut, and we have somewhat sold off due to earnings. So I'd expect to see a run into the end of the month where we could be up as much as 1% on the S&P 500. You guys take care. Have a wonderful evening. I look forward to talking to you next week. Bye-bye, everyone.